We found that in motels, we can get a 20% per annum return over 5 years in a property-backed commercial asset, because that's where the gems are. That's under the radar. Deals between 5 and 15 million, too small for institutions, too large for families.
David, over to you. I was speaking with a fund manager. You actually don't know I'm going to say this. I was speaking with a fund manager and he mentioned that they were managing previously, multi-billions of dollars worth of assets in property, and they scoured the entire Australian landscape trying to understand where they could actually get their best returns in Australian property. And where they landed up was in motels. My question for you is, you've obviously had a transition. You've gone from many different sectors. What led you to this area of sort of targeting motels for opportunity?
It's very simple, Steve. Return and low risk. I don't say this to big note myself, but I have worked in private equity in Europe, in venture capital, doing deals in London and Wall Street. We've listed a venture company on the NASDAQ. I've been the chief investment officer of a VC firm that targeted climate tech. But I thought, where do I want to put my money? I've travelled the world, I've seen lots of sectors and lots of returns. And the returns we were targeting when I was in Europe was for large buyouts and mega buyouts was between 16 and 18%. And for venture, it was between 25 and 28%. That was a global benchmark for upper quartile funds that we were investing in. But if you look in Australia and you look property backed, we found that in motels, we can get a 20% per annum return over 5 years in a property-backed commercial asset. So you ask yourself, well, why is that the case? Well, it's just an under-the-radar segment. I've heard an institution literally say this a couple of months ago. Well, if it's not within an hour of a capital city airport, we're not interested. Well, that's when we start getting interested, because that's where the gems are. That's under the radar stuff, deals between 5 and 15 million, too small for institutions, too large for families. And that's where we've found the best returns. We're buying motels at between 10 and 12% yield, so we can provide our investors with that income yield. And then the upsides from consolidating the market, operational improvements, and the upside when we put 50 of these together, you get a real kick at the end. Equity when you're listing a $500 million fund or selling a $500 million fund as opposed to a single asset. It's more diverse, and therefore you get a much better valuation. So the returns are great, and it's a great property in a great location. When you go into a regional town as Dubbo or Seymour or Coffs Harbour or Orange or Bundaberg, what's on the centre of town in the main road? It's a motel, and they're very busy, and there's a lot of corporates staying there, a lot of activity in our regions. 650 billion of Australia's GDP comes from the regions. There's a lot of agriculture, mining, logistics, education, healthcare going on in our regions that you might not realise, and all of this has got to be serviced with a service sector like accommodation.